Hey, welcome back to the channel, everybody. Today, I want to go over another YouTuber's portfolio and give you guys my impressions, my opinions on this specific portfolio. And that is from Jimmy from Learn to Invest YouTube channel. And I gotta say, I'm a big fan of Jimmy. In fact, I've been a subscriber of his channel for probably 4 or 5 years now. I think he is one of the few channels that's out there that is very transparent, especially for a large YouTube channel like himself. I think he has over 200,000 subscribers. It's really hard to find a channel that is very open, honest. In fact, when he buys a stock, he usually comes out, tells his whole audience he's going to buy it, and usually waits a couple of days to do so. So I have a lot of respect for him, and we're just going to go through each one of the stocks in his portfolio. He has 10 stocks in total. So we'll go through the stocks. We'll go through how big the companies are, so their market cap. I'll tell you what the current price is, what he bought it for, and then what his gain and loss is on that particular stock as of today, what percentage of the portfolio it is, and then does that stock pay a dividend or not. And today is June 16th, so keep that in mind whenever you watch this video. That's as of today's stock price, June 16th, 2022. So let's just start with his smallest stock that he owns, and then we'll work our way up from there. So first stock is Warner Brothers Discovery, ticker symbol WBD. This is a, well, market cap's not right. This is 333 billion. I think that's 33 billion. There we go. That looks better. Current price for the stock is $13. He bought it at $24. He has a negative 46% loss on this right now. It's about 1% of his portfolio. So the reason why he has Warner Brothers, he didn't go out and actually buy this stock directly. He bought AT&T, and AT&T here recently spun off Warner Media, and Warner Media combined with Discovery to become Warner Brothers Discovery. So that's why he owns a very small percentage of this particular stock, because it was a spinoff from AT&T. But he's down 46%. This is a stock that I currently own. I think Warner Brothers Discovery, personally, I think it's a great company. I think it's very undervalued where it's at. Even a buy price of $24, I don't think is bad. It looks bad right now, but I think in the long term, it should recover. And I think the reason why a lot of selling has been going on with Warner Brothers in particular is that a lot of AT&T folks who are owning Warner Brothers after that spinoff are selling out of that stock. That's kind of what my thinking is around that. Obviously, the stock market in general has been down, but I think companies in the streaming space in general have very suppressed stock prices compared to a lot of other industries. So you look at Netflix, look at Paramount, Warner Brothers, a lot of them out there just look that they have really good value in general. So there's Warner Brothers. Next up is, let's take a look here, Facebook or Meta, ticker symbol FB, market cap of almost $500 billion. Current stock price is 161. He bought it for 220. He's down 27% on this particular stock. Is about 8% of his portfolio. This is another stock I own. I think Meta is a great company. I think it's run by a great CEO. Most people either hate or like Mark Zuckerberg. I think the transition to the metaverse is going to be very interesting for this company. And in fact, they just recently changed their ticker symbol, so it's not FB anymore. I think it's actually Meta, just here in the last week or so. So I should probably say Meta as well. So yeah, I like Meta a lot. I think long term it's going to do really well. They obviously have Instagram, they have Facebook. They've been hit hard over the last several months. Obviously, they reduced their guidance for revenue, which scared a lot of folks. And also, they were starting to show, the losses from the operating income side of their business for the Reality Labs, which contains the metaverse. So 2021 alone, they lost $10 billion. They lost a few $1 billion in their first quarter. And I expect them to continue to lose money over time. Now, they're putting a lot of money in capital expenditures into that particular business as well, in Reality Labs, to generate or create the metaverse. I think it's going to pay off for them long time, but we'll just kind of see how that plays off there. All right, so next stock up is Disney, ticker symbol DIS. This is another one that I own. $171 billion market cap. Today it's trading at $94. His buy price is $98. He's negative 4% on this stock. It's 8% of his portfolio. I think Disney is one of those unique companies. I think they have the best moat, best competitive advantage of any company out there, period. Another one that comes to mind is Coca-Cola as well. But, Disney is one of those companies that can spin off or create new revenue segments like Disney Plus just from their particular brand. I mean, think of Disney. They just have so much that goes into it. Obviously, they have Star Wars now, National Geographic, all those Disney films. But I think the X factor in all of it is Disney Plus. If you look historically for Disney, their operating margins, for example, have been between 20 and 22%. But I think Disney Plus itself can have incredible margins, even up to 28 to 30% down the line. And obviously with their parks and resorts and the cruises and all that, even though they raise prices, people still go there. I think it's a fantastic company. Right now they're not paying a dividend, but for a long time they did. They stopped doing that, obviously, during the pandemic. At some point they'll probably start paying dividend again, but I think it's wise for them just to conserve cash at this time. So there's Disney. Next one up is Activision Blizzard, ticker symbol ATVI, $57 billion market cap, $74 is the current price, $63 is Jimmy's buy price. He's up 17% on this stock. It's about 9% of his portfolio. Activision Blizzard. So this one is an interesting one. It does pay a dividend. Warren Buffett came out and bought more of the stock. In fact, one of his proteges bought it last year when it took a huge dip from $100 a share all the way down into the 50s. But Warren Buffett bought a bunch of these shares in the first quarter of this year because it's really an arbitrage bet. Microsoft came in, wants to buy Activision Blizzard for around $70 billion. Right now they're trading at $57 billion. And the agreement is that they will basically pay off shareholders of Activision Blizzard at $95. So if you think about it, at today's stock price at $74, you're talking like a 20 to 25% uptick from there. Now, it doesn't mean that this deal's going to go through. If it does go through, it's going to be sometime next year. The government's got to approve this type of deal. But even if they don't approve it, I still think a $63 buy price for Activision Blizzard makes a lot of sense. When I looked at it several months ago, I thought they were around $95 to $100 for their fair value or intrinsic value for this company. So I don't think Microsoft is overpaying for this company at all. I think it'd be a very good deal for Microsoft, and I think it'd be a good deal for shareholders of Activision Blizzard. So that one is pretty interesting. Next one up, and I do not own that one personally. Next one up is AT&T, ticker symbol T, $135 billion market cap. It was much bigger than that when they had Warner Media. I think they were closer to 180 to $200 billion market cap at that time. Current stock price is $19. He bought at $19, so it's pretty much even on the stock right now. It's 9% of his portfolio. It does pay a dividend. AT&T was never one that I've been interested in it. The only reason why I would buy it is to get a piece of Warner Brothers Discovery. But I bought Warner Brothers after the whole spinoff. AT&T, there's just so much debt on their books. Now, they were able to alleviate around, I think, $43 billion by the spinoff of Warner Media. But AT&T historically has had so much debt. You're talking close to $200 billion of debt. And they were trading around like $180, $170 billion market cap, whatever it was, before they took a big dive in their stock price about a year or so ago. But AT&T is just never one that I've been super interested in. It's been a really good dividend payer for a long time. Certainly, I think it's a pretty less risky type stock, but I don't think there's a lot of upside to AT&T. Now, next up is Intel, ticker symbol INTC, $150 billion market cap. Today it's trading at $37. Buy price was $44, so he's down 16%, 11% of his portfolio. It does pay a dividend. Intel is one of those interesting companies. I do not own Intel. It's always intrigued me because of their management. I think Patrick Gelsinger, who's the CEO, and then Zinser, who is the CFO, which they got from Micron. I think they're really the best management team that is out there. But Intel is one of those for me. I just have a hard time figuring out what their competitive advantage is over, say, like an AMD, because they've been losing a lot of market share. However, this company is putting a ton of money into their foundry segment of their business. They're putting a ton of capital expenditures. If you look at their free cash flow, it's gone from around $20 billion a year all the way down to less than 10 billion, but it's because they're putting so much money into their capex in order to fund this foundry. So it's a high risk, high reward, type of proposition that they're doing. If you look at Intel historically, I mean, they have, the stock really has not moved for several years. I mean, it's been pretty much flat. Now they do pay a really good dividend. I think it's over 4% right now. But foundry business really pays off. It should be interesting because they should be able to generate more revenue in the future if it pays off, right? They also sold off some of their NAND memory chip division as well. So they're kind of refocusing the business a bit and trying to go a different direction. I think they're going to make it and do well. I think Patrick Gelsinger is the person to do it. So we'll just kind of see how things go over time. Next up is Alibaba, ticker symbol BABA. So that is a stock I also own. $270 billion market cap. Current price is $100. Buy price was 122, so he's down 17% on this one. 12% of his portfolio does not pay a dividend. Alibaba is one of those stocks that has been talked a lot in the YouTube space just in general. It's obviously a Chinese company. They have been just absolutely decimated over the last 18 months. If you can go on and on about everything that's happened to them, about the Common Prosperity Drive, having to donate, $15 billion worth of US dollars to the government. They obviously got fined $2.7 billion over a year ago. A lot of super investors like Moshe Pabrai bought in, Phil Town bought in. They sold out of it. Charlie Munger bought a bunch, doubled up, then sold half of it. I'm one of those Alibaba bag holders still. I still think Alibaba is an incredible business. They have over a billion consumers worldwide. I think it's around like 1.3 billion, almost a billion in China alone. I think the X factor with Alibaba is their cloud business. And if you look at Amazon specifically with their AWS division, I mean, that's really what is creating all the operating income from the business. In fact, in 2021, the only reason that Amazon was profitable was because of their AWS division, which is their cloud computing division. And so I think Alibaba can get there as well. I think they're around 38% of the cloud business in China. I think, 4 or 5 years out from now, they should be at least a third of the cloud business in China. And there's tons of profits in that type of business. Obviously, we have no idea what's going to happen with the SEC delisting, relationship between the United States and China. We're going to have to see all that plays out. But another thing, too, is with Alibaba, the fundamentals themselves have deteriorated over the past year. About a year ago, 15 months ago, I really thought the intrinsic value of Alibaba was around $300 a share, between $300 and $350. I think, today, based on fundamentals, it's closer to $200 a share. So we'll just kind of see how things play out. I still think there's a big margin of safety there, but there's a lot of risk as well. All right, so next stock on the list is Lockheed Martin, ticker symbol LMT. $100 billion market cap, $400 today. It looks like Jimmy bought it $336. 20% gain on this stock. It's about 12% of his portfolio. It does pay a really good dividend. I think it's around 3%. Right now, Lockheed Martin is a stock I used to own. I think it's an incredible company. Lockheed Martin is in the government space. In fact, they were, I think up until maybe a week or two ago, they were the largest U.S. government contractor. I think Raytheon has taken that over. Or Raytheon may be global and Lockheed maybe just for the United States. I'm not sure. But Lockheed Martin is just an incredible business. You look over the last 10 years, they've been able to grow their business top line, grow 10% per year. Now there's going to be some investors that are not interested in Lockheed. They make jets. They make engines. There's a lot of things that they do that people may not like or really approve of. But from a business standpoint, they're very profitable. I think they're a great company. I think they have great management in place. This is a stock. Actually, when I bought it, was virtually the same price as what Jimmy had, and I sold when it went over $400 at that time. So it's kind of where it's at now. But fantastic company. $400. I think personally that's probably close to what the intrinsic value of Lockheed is. But it's a pretty stable company, and I think going through like a recession or a bear market like we're in right now, Lockheed should do pretty well. And stuff going on in Europe with the war, the stock should stay pretty stable or even potentially even go up from here, at least in short term. All right, next up is Apple, ticker symbol AAPL. $2 trillion market cap, $130 stock price today. He bought at 141. He's down 8%, 12% his portfolio. It does pay a dividend. Apple has been pulling back. In fact, the FANG stocks in general, I mean, you look at obviously Meta, Netflix have taken huge dives over the past several months. But even Apple here in the last week has been hit, going down quite a bit. Amazon's really been going down. Even Google has been going down as well. But Apple's just one of those companies that's funny because I look at even a current stock price of $130. I think it's overvalued. I think the intrinsic value is lower than that. However, Warren Buffett bought more into the company in the first quarter. So obviously he knows more about this than I do. But it's a great company. I can't diminish that at all. I think Apple's one of the best companies out there. In fact, it's the first stock I ever bought personally when I first bought into my first equity, just because it's my favorite company. I would love to own this again if it drops certainly under $100 a share. But it's a $130 share. We'll kind of see how things are going. Obviously, there's been a big pullback in the market in general. So maybe it'll get there. You never know. All right, so there's Apple. And last stock, his biggest one in his portfolio is Google, or I guess Alphabet. Should probably say Alphabet, not Google, to be more technical, I guess. $1.4 trillion market cap. $2,100 it's trading at today. He bought it at $2,400. He's down 14%. 18% of his portfolio. It does not pay a dividend. Google is an incredible company. I do not own this one. Personally, I've always wanted to own it. And it's getting down to a level that I am getting very, very interested in. Unfortunately, it means I probably have to sell some other stocks to buy Google. But, Google is just one of those companies. I just think they just have an incredible moat. The YouTube business that they have that you guys are watching right now, I don't know if there's a better business model than YouTube. If you think about it, us content creators are the ones making all the content. All Google is doing is saying, here's our platform. Content creators, just post your stuff on here. And then we'll charge, these people to place ads on it, and then we'll take half, you take half, and everybody's happy. I mean, what kind of great business model is that by Alphabet, not having to make content and then just take a half a cut of the money from that? So I think Alphabet, if I look at the FANG stocks, I own Meta. I think it's just so undervalued from there. But when I look out into the future, I think Alphabet, just is one of those very stable companies that has just a tremendous moat from their browsers, also the products they make from their phones, and so on. So I think just Google is just an incredible company, and don't be surprised it's in my portfolio at some point, and maybe that some point will be really, really soon. So those are his 10 stocks. Now, looking at these 10 stocks, really something that jumps out to me right away, these are huge companies. I mean, the only company that he has that's under $50 billion market cap is Warner Brothers, and he only got that from the AT&T spinoff of Warner Media. So other than that, all other ones are over $50 billion. In fact, most of them are well over $100 billion market cap. So he's buying into very, very large blue chip type companies. Half of them pay, dividends. He owns three of the FANG stocks. So the only FANG stocks he doesn't own would be Amazon and Netflix, it looks like. But he does own Alphabet, Apple, and then also Meta. And another thing that really stands out to me too is I think this is going to be a really weatherproof portfolio going into a bear market or a recession in general. And I think we're in one right now. There's a lot of debate, are we gonna not go into one? Are we in one right now? Obviously the market's pulled back more than 20%. So we're technically in a bear market right now. I think inflation right now is a huge problem. There's 3 months in a row now, well over 8%. The Fed's just raised the interest rates by 75 basis points. They're talking about doing that again, 50 basis points or even higher in July. I think there'll probably be another 3 or 4 interest rate hikes before the end of the year, just to battle inflation. And so I think there's a really good chance we're going to be in a bear market for a significant period of time. I'm certainly not a fortune teller at all, but it certainly seems like we're kind of going that direction. So I think we're going to see a lot more pain in the market. I don't think we're done with that yet. And I think this portfolio should do really well. I think should weather better than the market. Now, not to say that it's not going to pull back. I mean, look at his positions. I mean, 1, 2, 3, 4, 5, 6, 7 out of his 10 positions, he's negative right now. In fact, he's got a couple of positions that he's down by more than 25%. So even though I think I like Jimmy's portfolio, I think it's less risky than most portfolios that I've seen. I think it's going to be pretty weatherproof against a recession or do better than what the market's going to do against that. However, it doesn't mean that he's not going to lose money on these stocks in the short term. But I think it's going to do pretty well. And I think he's in a lot of different industries. You're talking, he's on the government contract side with Lockheed. He's obviously in tech with Apple and even Alphabet. He's in the gaming industry with Activision. He's got some just companies that are in discretionary type business, maybe like Warner Bros. Discovery. He also is in the semiconductor business, Intel. So he has a really good, diverse portfolio for only having 10 stocks. I think he's spread across multiple different sectors in that. But I would love to hear from you guys. I mean, what is your opinion on Jimmy's portfolio from Learn to Invest? Do you own any of these stocks in here? Do you dislike any of these stocks that are in there? Are you surprised he has any of them on that? Thank you so much for watching. Now, if there's another portfolio of a YouTuber that you want me to do an analysis on or just kind of go through, throw it down in the comment section. I read every single one of those. If you haven't liked the video already, please hit that like button on the way out. I really appreciate it. If you like this kind of content, I encourage you to subscribe to my channel. Thank you guys so much for watching. And before I go, I will mention that I do have a Patreon. I'll put a link down description below. I do share my portfolio every single month on there. I share my buys and sells. I also get access to my Discord channel with other value investors. I do have a limit on my Patreon, so once that hits that limit, I'm just going to shut it off, and that will be it. So thanks again for watching. I'll catch you guys on the other side. Take care, and God bless.